Welcome to the 2025 NGS Super Annual Members Meeting. Thank you for joining us. Today you'll first hear from NGS Super's Independent Chair, John Battams. He'll be followed by CEO Natalie Prevotera, who'll share an update on the fund's performance and progress. Chief Member Officer Ben Facer will then provide an overview of recent developments for members, followed by Chief Investment Officer Ben Squires, who'll take you through NGS's investment performance in more detail. Before we begin, a brief housekeeping note. We welcome your questions about the fund. Please submit them at any time using the green Q&A box on the right-hand side of your screen. If you experience any technical issues during the live stream, please refresh your browser. The live stream works best on a desktop device. Before we start, please note that the information provided today is general information only and does not take into account your objectives, financial situation, or needs. So, before acting on this information or making an investment decision, consider whether it's appropriate to you and read our Financial Services Guide, product disclosure statements, and target market determinations, which are available on our website at ngssuper.com.au. You should also consider obtaining financial, taxation, and/or legal advice tailored to your personal circumstances before making a decision. And now, to officially open the meeting, please welcome NGS Super's Independent Chair, John Battams.
Hi and welcome everyone. It's a pleasure to be here with you today. As we reflect on the year just past, it's clear that it has been a defining one for NGS Super. Throughout the year, we remain focused on delivering real value to our members. We achieve strong investment performance, maintain competitive fees, and continue to provide the high level of service our members expect and deserve. Currently, NGS has over 110,000 members and $17.5 billion funds under management. On investment performance, I'm pleased to share that our diversified My Super option, where most of our members invest their money, returned 11.17% for the 24-25 financial year, an excellent outcome. This result reflects a disciplined and consistent investment strategy executed by a highly skilled team of investment professionals who remain focused on long-term outcomes. These results also highlight the success of our investment strategy, the depth of our internal capabilities, and our ongoing commitment to delivering sustainable value for members across a diversified range of asset classes. Our Chief Investment Officer, Ben Squires, will share further insights into our investment performance shortly. Good governance of any fund is crucial to ensuring that the board's responsibilities are fulfilled. And at NGS, our main responsibility is to operate in the best financial interests of members. As a fund, we remain committed to the principles of good governance, working to provide our members with the confidence that their retirement savings are being managed within a rigorous, disciplined framework. The board worked very hard across the 24-25 financial year to embed a revised governance structure, adding 2 independent directors on the board, including myself as chair. This has helped bring new perspectives to board deliberations, ensuring the products, services and support we offer our members are of the highest quality. The NGS board is focused on developing an organisational culture based on key credentials, appropriate tone from the top, transparency, trust, and most importantly, that everybody in the organisation is taking absolutely full responsibility for their actions, behaviours and decisions. Alongside investment performance, the last year has also been one of significant operational transformation. On the 1st of November, we transitioned to our new administration service provider, a major milestone for NGS Super. This transition was a multi-year program underpinned by strong governance and detailed planning. Members can now benefit from, firstly, real-time access to member information, enabling more accurate and personalised communication. Streamline operations, including faster and more automated transaction processing and improved case management, giving our teams a complete view of inquiries to resolve issues more efficiently. During the year, we undertook a comprehensive review of our fee structure to ensure costs are recovered fairly and equitably across products and investment options. As a result, 80% of members experience a reduction in fees, allowing more of their money to remain invested and working towards their retirement. Importantly, the board remains deeply focused on quality and risk management, particularly when it comes to service providers and partners. Recent failures across the industry have highlighted the consequences when organisations overpromise and underdeliver. At NGS Super, we are deliberate and cautious about who we work with, how we manage risk, and the standards we expect. Looking ahead, the board endorsed our new 26-28 strategy and business plan in June this year. This strategy is anchored in 4 enduring fundamentals that matter most to members: strong investment performance, competitive fees, quality products, and most importantly, excellent service. Our key priority will be to retain and grow our membership. A growing fund is the best indicator of a high quality and successful business. In closing, I'd like to acknowledge the dedication, resilience and professionalism of our people, qualities that underpin our ability to deliver to members every day. Thank you, and to share more about the exciting work the team is doing, I would now like to hand over to NGS Super CEO, Natalie Privatera.
Thanks, John. I'm looking forward to the year ahead and sharing what it means for our members. I'd like to welcome you and thank you for taking the time to join us today. Most importantly, thanks for trusting NGS Super with your financial future. A reminder that you can submit any questions you have on the right-hand side of the screen in the green Q&A box. If we can't answer all of them during the meeting, we'll provide a written response within a month. Now, please note, we aren't able to answer questions about your individual circumstances today. It's been an important year for NGS, and today I want to share how the fund has performed, the progress we've made, and what it means for you as a member. For more than 35 years, we've supported members to build confidence in their super. From our conversations with members and the feedback we receive every day, one thing's clear: confidence comes from strong investment performance, supported by high-quality service and trusted advice. This guides how and where we operate as a fund. We've built the services, advice, and tools to really support you and help you navigate your financial future. And because confidence matters, that's why we say NGS is built for what matters. Against a complex and challenging global economic backdrop, our focus has remained firmly on disciplined, long-term decision-making that's in the best interests of our members. As John highlighted, the result delivered by our diversified My Super option is a clear example of how investment strategy continues to work for members, delivering great performance today while positioning the portfolio for strong, long-term outcomes. Shortly, you'll hear more about investment performance from our Chief Investment Officer, Ben Squires. While investment performance is critical, confidence is also built through the everyday interactions you have with us. So whether you're speaking to a super specialist, meeting with a financial planner, or using our digital tools, our goal is clear: to ensure you're informed, supported, and in control of your super. Over the past year, more members than ever before have sought guidance and advice. And that's why we deliberately strengthened how and where that support is delivered. Thousands of members accessed our advice services, and this ranged from simple conversations to tailored financial planning, delivered face-to-face, online, in homes, schools and workplaces. We also know that while full financial advice with a licensed advisor is incredibly important, many members are seeking support that sits somewhere in between general guidance and full financial advice. But we still want that advice to be high quality, personalised, and easy to access. Late last year, we introduced an additional advice option to meet this need, Advice Essentials Plus. It's now live and supporting members through key financial decisions. Our Chief Member Officer, Ben Facer, will speak more about our new affordable advice offerings and the full range of advice services shortly. But what I do want to emphasise is that access to guidance and advice shouldn't be difficult, and it doesn't need to be expensive. We're proud to be able to offer practical, affordable advice options, from simple guidance provided by our super specialists at no additional cost, through to more personal advice options at a range of different price points. And because we're always looking to enhance the support we provide, we'll further expand access to advice this year through the launch of our digital online advice service. As a profit-to-member service is not an add-on, it's fundamental to who we are. Our service promise, members first, always, sets a clear and measurable standard for the experience our members should expect. Delivering this consistently gives you the confidence you deserve in your super fund. And that commitment was recognised when NGS was awarded Outstanding Customer Service Award 2025 by WeMoney. The award recognised our personalised and proactive approach to service. An important part of delivering great service is ensuring our systems keep pace with member expectations. As John mentioned earlier, we've now completed a major upgrade to our administration services. And this has been one of the most significant service transformations in our history. It's more than a technology upgrade. It's a modernisation of how we deliver service, replacing legacy systems and improving efficiency. I want to sincerely thank you for your patience during this upgrade. While change on this scale is never without challenges, we're now well positioned to begin realising the full benefits of this investment. Beyond service and advice, we remain really focused on delivering value for money and timely support when members need it most. And this includes our insurance offer with our long-standing partner, TAL. Our approach is to put members first during what can be an incredibly stressful and emotional time. In 2024-5, more than $58 million in insurance benefits was paid to insured members and their families through insurance claims. We did this with a strong operational focus, ensuring claims were processed as quickly as possible, so support arrived when it mattered most. Your fund has delivered strong results this year, underpinned by disciplined investment decisions and a very clear focus on what matters most to you, including a relentless focus on service, advice, and maintaining competitive fees. There'll be time for questions shortly, but for now, I'm pleased to hand over to our Chief Member Officer, Ben Facer, to share more about what's ahead for our members this year. Thank you.
Thanks, Natalie, and hello to everyone joining us today. I appreciate the opportunity to share an update on what's changing at NGS, and importantly, what those changes mean for you as a member. As Natalie mentioned, how you engage with us really matters. At every interaction, whether it's online, over the phone, or in person, our goal is for you to feel confident, informed, and in control of your super. That's why we have made additional investments in our digital services, advice offering, and service model, with more improvements on the way. These changes are all focused on delivering clearer, simpler experiences and making it easier to access trusted advice and support when you need it. Firstly, I'd like to speak about our transition to the new administration system and what this means in practical terms for members. By redesigning our core administration processes from the ground up, we have modernised our operating model and strengthened the fund's capability for the future. The new model streamlines operations and enables smoother interactions across your super journey. Alongside the administration upgrade,
we have continued to enhance your digital experience across our platforms, including Member Online. These enhancements are designed to make completing transactions simpler and day-to-day management more straightforward, and we're beginning to see the benefits of the new system. Later this year, we will introduce new features to Member Online and launch our new mobile app, giving you convenient access to your super wherever and whenever you choose. We'll continue to refine and strengthen our services because we know ease of access matters. Importantly, our team remains available whenever you need support. We understand access to trusted advice remains a priority for many members, and it's an area where demand continues to grow. Last year, thousands of members received support across our advice services, ranging from simple conversations to tailored financial planning. This year, we are building on that momentum. In the coming months, we'll launch a new digital advice platform within our Advice Essentials offering. This interactive service will provide personalised financial guidance available when it suits you. By combining our super expertise with new technology, getting the right advice at the right time will be easier than ever. We understand how important it is to receive sound financial advice so you can confidently plan for your future. That's why our new digital service will be completely free of charge, making it even easier for members to access the support they need. We have also expanded our phone-based advice offering to include new low-cost options designed to bridge the gap between simple guidance and comprehensive financial advice. This option will give members more affordable ways to access support and advice. Regulations restrict the type of advice that we are permitted to provide at no cost, and with most financial advisors, the only option is full comprehensive advice costing thousands of dollars. With our Advice Essentials Plus, you can receive advice on topics such as retirement solutions and fund consolidation for just a few $100s. Our no-cost advice service, Advice Essentials, will continue to play an important role alongside expanded access to more comprehensive advice options through Advice Platinum for members who want additional support. While we're excited to share these upgrades to our digital services, we know that face-to-face support continues to matter for most members. That's why we're continuing to expand our personalised on-site service, meeting members where they work and live. Last year, we met with more than 5,000 members in person, and this year we're on track to reach over 7,000 members across the country. Our super specialist meetings, whether online or face-to-face, are free of charge and are a great way to delve a little deeper into your super needs. Finally, I'd like to touch on how we're supporting members as they approach and move through retirement. Over the past year, we've continued to strengthen our retirement offering. Many members are choosing our Easy Default option, which provides a regular income stream, cash management tools, and flexibility in investment choice. It allows members to remain invested in line with their preferred strategy, supporting continued growth where appropriate, while drawing a reliable income. Retirement is not the end of your super journey, it's a new phase. That's why we continue to invest in products, advice and support designed specifically for retirement, because confidence at this stage matters most. As part of this ongoing development, we've also announced our planned Guaranteed Retirement Income product. As the name suggests, this product is designed to provide a guaranteed retirement income for life, regardless of how long you live, giving members greater certainty about their retirement income. This reflects our commitment to delivering solutions that support informed decision-making and help members enjoy a more secure and fulfilling retirement. We're developing this product in partnership with Challenger Life and expect it to be available in the second half of this year. As John highlighted earlier, trust is earned through consistency and delivery. Members should feel confident that they can remain with a fund they know, with the support, governance and advice services needed not only to retire, but to manage income and decisions well into later life. Together, these initiatives reflect our ongoing focus on improving service, strengthening long-term outcomes, and ensuring NGS Super continues to deliver what matters most to our members, both now and into the future. Ultimately, this transformation has made interacting with us even easier and improved your member experience. Thank you again for choosing NGS Super. We look forward to continuing to support you on your super journey. I would now like to hand over to Chief Investment Officer Ben Squires, who will share more about our investment performance.
Thank you for joining us today for NGS Super's annual member meeting. Now, I'd like to begin by acknowledging a strong year for members from an investment perspective. Over the past 12 months, NGS Super has delivered top quartile performance in the Super Ratings Balanced Fund Survey, reflecting disciplined execution, sound decision-making, and a clear focus on long-term member outcomes. Now, today I'll provide an overview of our investment activities, outlining key developments in global financial markets, and explain how these factors have influenced portfolio positioning and performance. Now, over the year, the fund continued to invest in people, systems, and capability. We strengthened the investment team, we further embedded data-driven tools and enhanced our asset allocation and risk management framework, delivering greater insights, faster decision-making, and improved efficiency. Now, market conditions were shaped by technological change, mixed economic signals, and heightened policy and geopolitical uncertainty. The rapid advancement of artificial intelligence remained a key structural theme, driving strong performance in select global equity markets, particularly the United States. Macroeconomic conditions have remained uneven globally. The United States continued to stand out, supported by resilient consumer spending, fiscal stimulus, and strong corporate profitability, while Europe, China, and Australia experienced more subdued growth. In Australia, weak per capita growth and cost of living pressures persisted. Now, on the inflation front, the trend continued to evolve, with goods inflation easing as supply chains improved, while service inflation remained more persistent due to labour and domestic cost pressures. This has complicated central bank policy decisions, particularly at this late stage of the economic cycle. Now, although some central banks have begun easing restrictive setting policy uncertainty remains elevated. Geopolitical tensions and trade fragmentation have added further volatility. Now, against this backdrop, the fund remained focused on diversifying the portfolio, risk management, and active asset allocation, positioning the portfolio to capture opportunities while maintaining resilience. Strong relative outcomes over the past year reflected this disciplined, member-focused approach. Now, the diversified MySuper option returned 11.17% for the year to 30 June 2025, exceeding both its CPI objective and ranking in the top 10 across all growth funds for the MySuper option in 2025. Performance was driven primarily by exposure to Australian and international share markets, supported by an overweight position relative to the strategic asset allocation that we've set. We spread investments across different asset classes, so we're not relying only on the share market for returns. And this has helped protect your super during periods of volatility, and in the long term, has grown your super balance. This strategy can enable strong results across various sectors. Now, we've improved returns from our unlisted assets, including infrastructure, private equity, private debt, and real estate. And this has also contributed meaningfully to returns over the year. These assets represent roughly 30% of the portfolio and continue to provide a competitive advantage to the fund. Now, our strategic focus on high-quality unlisted assets remains a key driver of our medium to long-term return drivers. With strong above-median performance over 3 years, the portfolio remains well-positioned to deliver superior outcomes for members into 2026 and beyond. Now, turning to the other NGS investment options, this chart compares the performance of NGS's key investment options against the super rating median over the past year. The key message is clear. every NGS investment option outperformed the respective peer median. Our growth-oriented options, including the high growth and diversified MySuper option, delivered returns ahead of the median, reflecting effective asset allocation, strong equity selection, and disciplined risk management. Australian shares and international shares were the standout performers, with international shares benefiting from strong global markets and exposure to structural growth themes such as technology and artificial intelligence. Now, the balanced and defensive options also exceeded the peer median, demonstrating value added across both growth and more conservative portfolios. The property and cash similarly outperformed in a challenging environment, highlighting strong manager selection and portfolio construction. Overall, the broad-based outperformance reflects the depth of the fund's investment capability and continued focus on delivering strong, risk-adjusted outcomes for members. Now, turning to the new financial year, this quilt chart shows the performance of the NGS investment sectors across each financial year since December 2020, illustrating how market leadership rotates over time and reinforces the importance of diversification. In the most recent year, 2025, commodities were the strongest performing asset class, followed by liquid alternatives and international shares. Commodities benefited from geopolitical uncertainty, supply constraints, and demand linked to infrastructure and the energy transition, with gold also providing inflation protection. Liquid alternatives performed well amid higher interest rates and market volatility, where flexible strategies were able to capture opportunities and manage risk. International shares were supported by resilient global growth, particularly in the United States, alongside strong earnings and continued investment in technology and artificial intelligence, including opportunities in China. When you zoom out over the full period, it's clear that no single asset class stays on the top at all the time, which is exactly why the fund's diversification risk-aware approach works so well. By thoughtfully spreading investments and managing risk, the fund is designed to stay resilient and capture opportunities across different market environments. As we move into 2026, the global macro environment remains finely balanced, shaped by elevated geopolitical tensions and high asset valuations. The US economy enters 2026 in a relatively strong position, while China remains reliant on manufacturing and exports as it struggles to revive domestic demand amid property market imbalances and high household savings, whilst conditions in Europe are relatively stable. With limited capacity for further fiscal stimulus due to high government debt, global growth will likely depend on policy reform, private sector investment, and easier liquidity and monetary settings. Headline inflation has eased significantly from post-pandemic highs, though core service inflation remains persistent, except in China where deflationary pressures continue. While major policy tightening is largely behind us, further US rate cuts are expected into 2026, with fewer adjustments likely in Australia. Equity markets continue to be supported by solid earnings, though risks remain if growth weakens or policy missteps occur. Bond yields remain elevated, likely a reflection of fiscal concerns and inflationary uncertainty, while geopolitical risks continue to add volatility. Now, based on our observations of various indicators, we translate these views into asset allocation views, which is shown in this matrix here. For each asset class, we assess the impact of returns and the relative attractiveness across the various assets in which we invest. The left-hand table shows that we are slightly negative on shares and neutral on all other sectors with the exception of alternatives. Alternatives include non-traditional asset classes such as hedge funds, private debt, and equity and infrastructure. On the right-hand table, you can see that we are neutral across regional allocations, with the exception of the US, which we're slightly negative, and China, which we are slightly positive. We'll continue to be positive on commodities such as gold. It is important that this reflects our current thinking and may change in the future.
We maintain a neutral exposure to risk in the short term with a series of hedges that allow us to both participate in rising markets, preserve capital in the event conditions deteriorate. We've continued to maintain an allocation to gold and a positive on precious metals and industrial metals as we expect them to appreciate over the medium to long term, in addition to providing a hedge against geopolitical risk, inflation, and deep recession. A long horizon outlook seeks to exploit secular trend opportunities across AI, robotics, autonomous driving, semiconductors, space, quantum computing, and energy efficiency, to name a few, and with a collection of attractive investments that we are expected to deliver long-term value over time. We've diversified our currency exposures with a reduction in our exposure to US dollars. And lastly, we continue to rebalance our portfolio to maintain a balanced exposure across the portfolio and minimize volatility and overall concentration risk. As stewards of your retirement savings, we are focused on protecting members' wealth while pursuing sustainable long-term growth. That's why we take a balanced long-term approach to investing and carefully managing risk while seeking strong returns to support your financial future. Private equity has grown to over $1.2 billion. Recent year performance has been below expectations, but we are expecting a stronger 2026, given a series of underlying companies scheduled to have initial public offerings on major stock exchanges around the world. Now, this has the potential to produce positive returns for the multi-asset class options, such as the diversified option. Now, this asset class has a long-term horizon, and we need to stay invested for over 10 years. As previously noted, these are unique investments that the fund makes that aren't available to retail investors or available on share markets around the world, and are extremely valuable to members' return generation. We've been able to access them because of the strong relationships we've cultivated with global investment managers over the 35-year history of the fund. Our target base case return is 15%, which represents approximately 5% premium to listed share market returns. We continue to seek out investments that allow us to lean into secular themes such as space, artificial intelligence, feeding 10 billion plus people, climate change, healthcare, and quantum computing, to name a few. One of the most significant opportunities has been in semiconductors, large language models, and the application of these technologies across various science modalities. In addition to fund investments, NGS has invested in a number of private companies such as OpenAI, Anthropic, Grok, Airwallex, and Lila Sciences, to name a few. These are very early stage venture capital companies that are backed by our identification of secular trends, and we seek out these companies that represent category leaders and are expected to deliver material value to our portfolio over time. These opportunities arise from the deep network NGS Super develops across the globe over decades of investing. These investments are either zero management fees or have discounted management fees, and all have an expected base case return target of above 25% per annum, but require patient capital for these returns to be realized. Infrastructure is an asset class in which we invest and is a large part of our portfolio and has grown to over $1.7 billion. This is an important asset class as these assets often offer long-term stable recurring cash flows with monopolistic characteristics. NGS selects managers and direct investments that possess these characteristics. This is again a long horizon asset class which we need to stay invested for over 10 years. Now, similar to private equity, these are unique investments the fund makes that aren't available to retail investors or available on share markets around the world, and we consider that they are extremely valued to members' return generation. Our target base case return for this asset class, it's more conservative, is 12%, which represents approximately a 2% premium to the listed share market returns. The 3 case studies presented are investments made across our portfolio. These examples include digital infrastructure and 2 power-related assets. NGS has invested into Nordic fiber operator and data center owners Global Connect alongside infrastructure manager EQT. Global Connect is one of the largest digital infrastructure and connectivity providers in Northern Europe. It owns and operates a vast fibre optic network and a portfolio of data centres delivering connectivity and related services to both businesses and consumers across several countries, including Denmark, Norway, Sweden, Finland, and Germany. Investing in fibre networks and digital infrastructure provides infrastructure investors with long-term contracted and predictable cash flows from critical digital assets, benefiting from high barriers to entry and structural demand growth drivers driven by cloud, data, and connectivity needs. The investment is also well positioned to capture accelerated market demand driven by generative artificial intelligence. The co-investment has zero management fees and has delivered a return of 12.3% per annum. In 2022, NGS co-invested in Intersect Power, a US-based clean energy company alongside fund manager Climate Adaptive Infrastructure. Intersect Power develops and operates large-scale solar battery storage and co-located energy and data center infrastructure. In 2024, Intersect Power and Climate Adaptive partnered with Google to co-locate data centers with renewable generation and battery storage. NGS achieved a partial exit from its fund investments in 2025 and attractive mid-teen returns, with total returns expected to exceed the 12% target. A further partial exit of this co-investment is anticipated in 2026 following Google's offer to acquire the co-located data center energy assets. NGS continues to build strong partnerships with Climate Adaptive Infrastructure and is committed to its next fund. NGS co-invested in Pacific Energy Group through its partnership with QIC. Pacific Energy is Australia's leading remote power generator, providing specialised power delivery in energy infrastructure to remote mining operations and communities where connection to the main grid is either impossible or prohibitively expensive. The company's portfolio exceeds 1 gigawatt across 48 built, own and operate power stations, and they are actively expanding into renewable energy, battery storage and hydrogen technologies. During 2025, Pacific Energy and QIC successfully completed a debt refinancing and equity raise, securing approximately $1 billion of growth capital to support the company's continued expansion on the west and east coast of Australia. Investments such as these provide our members with exposure to critical infrastructure that supports Australia's resource sector while participating in the energy transition through hybrid and renewable solutions. This co-investment has a zero management fee and has delivered a return of 12.45% per annum, offering attractive infrastructure exposure with stable contracted revenue and growth potential. The investment has a planned exit in 2029. NGS has built a very strong relationship with Alcion Group since completing the extensive due diligence and partnering with them in early 2020. NGS first partnered with Alcion in 2020 to develop the high-end Akoya over 55s apartment development in Greenwich, Sydney, which has been completed and provided strong investment performance for the fund. Akoya was a successful collaboration of two organisations, combining Alcion's development expertise with NGS's capital contribution, and we have now committed capital to further residential opportunities in Crows Nest, Paddington and Cronulla. These are attractive development opportunities in the residential sector within Sydney, with a focus on high-quality, high-demand areas with well-regarded developers and builders. Investments like these provide members with exposure to Australia's residential housing sector, participating in the addition of new housing and enabling downsizing opportunities. These investments are particularly attractive as they are fee-free co-investments with a return for Greenwich well exceeding the 20% per annum target, and similarly, expected returns on the other investments will also exceed this percentage return. Thank you for your time. And if you have any questions, you can submit them in the question box on the right-hand side of your screen.
Thanks for those insights, Ben. I'd now like to turn to the question and answer section of the meeting. Because we've received questions on similar topics, to avoid being repetitive, we'll group our answers together. Firstly, a question from John. John asks, as NGS has spent 2 months moving everyone over to a new and more efficient system, what benefit will members to see? Thanks for your question, John. Ben Facer will answer.
Thanks, John. The new system delivers 3 practical improvements for members. First, real-time access to member information enables our service teams to provide more accurate and personalised responses when you contact us. Second, streamlined operations, including faster and more automated transaction processing, mean many common requests, such as contributions, rollovers, and updates, can be processed more quickly. Because the system supports straight-through processing, we're also digitising and automating more forms and processes over time. This reduces manual handling, shortens processing times, and helps contain administrative costs. Third, open architecture allows us to continue to build and enhance our digital services for members, such as digital advice, advisor portal, and our app, all coming this year.
John's also asked, as the new system is more efficient, does that mean that our fees will be reduced to reflect that improved efficiency?
John, we're focused on improving retirement outcomes for our members. Reducing fees is one way that this can be achieved, but we also balance this with our focus on delivering strong investment performance and investing in services that continue to help give members the confidence to make the right decisions for their retirement savings. Rest assured, though, opportunities to reduce fees are a continuing consideration for the NGS team.
Now to a question from Michiko. Using the new comparison tool on the revamped NGS website and comparing to some other funds, the total administration fees for NGS appear to be higher. Why is this the case? Thanks for the question about our administration fees. They are appearing differently because we took the opportunity to rebalance some fees from the investment fee over to the administration fee without changing the total. We also now deduct the asset-based administration fee from your account rather than from investment returns, again, without changing the total fee. This is a much more transparent way for us to report on fees. And as a result of changing the structure of fees, total fees have reduced for around 80% of members, and for most others remain broadly comparable. Now to a question from Peter. Can you explain why the fund transitioned from Mercer to Grow, how member feedback since the change is being addressed, and also if fees are affected? We transitioned to Grow to strengthen our capability, improve transparency, and enhance outcomes for our members. The new platform provides modern systems and digital infrastructure for us to better support you. Now, as with any large-scale change, there were temporary service disruptions, including higher call volumes and longer wait times, particularly while members re-registered for the new member online portal. Some members experienced technical issues or needed assistance with the re-registration process, and this included enhanced security, such as unique email confirmation and SMS verification. Our team, who are all based in Australia, worked directly with members who required assistance. To help ease wait times, we also put more staff onto the helpline to assist with the volume of calls. We also continue to update information available on our website via the Upgrade Hub. I do want to apologise to anyone who was inconvenienced, but I am pleased to confirm that wait times have now stabilised and calls are being answered much more quickly. There has been no fee increase as a result of the transition, which I covered off in my previous answer. Now here's a question from Claire. When markets become volatile, how can I know my super is safe? Ben Squires, over to you.
Thanks, Claire. And markets do move up and down, and it's important to be clear that investment risks can't be totally eliminated. What we focus on, however, is managing risk while aiming to deliver long-term growth for members. We do this mainly by diversification through our investment portfolio across a wide range of asset classes, sectors, and strategies, so the portfolio is not reliant on any single outcome. For example, some investments tend to perform better when share markets are under stress, such as government bonds or commodities such as gold. We also invest in areas like infrastructure and private assets, which don't always move in the same way as share markets. We use hedging strategies to help reduce the impact of sharp market movements. Now, while short-term market volatility is unavoidable, our approach is designed to help members remain well positioned over the long term.
Thanks, Ben. A question from Joseph, who asks, does NGS donate to any union, political bodies or lobbyists from admin fees collected? I can confirm that we do not make any donations to unions, political bodies or lobbyists. Your financial outcomes matter, and we're very conscious about every dollar that we spend. Joseph, you've also asked another question, which is, the government is considering taxing unrealised capital gains in super funds. Does NGS have a view on this? What I will say is that tax concessions provided in super are a really important mechanism for delivering financial outcomes in retirement. At this point, we don't have enough information about the mechanism for taxing unrealised gains, but our position will always be to advocate for outcomes which are best for our members. A question now from Narelle. In retirement, how often should I check my super investments? Does this require full or comprehensive meeting, or can it be a newly established and less expensive meeting? Ben, would you mind answering?
Sure, thanks, Narelle. Look, it's really important to stay engaged in your super, including when you're in retirement. And reviewing your super does not always require a full meeting. We believe that advice should not be expensive and should not be hard to access. At NGS, we have a range of education and advice services starting at no additional cost, but also low-cost advice on simple matters, right up to full comprehensive advice on complex matters if you need it. In fact, a great starting point could be attending our webinar at 6 p.m. tonight, Australian Eastern Daylight Time, called Super for Retirees. And you can register for this on our website.
Okay, thank you, Ben. Now, it appears that there are no further questions coming in from our live stream. So with that in mind, I am going to pass now over to our chair. I'd like to thank you very much for attending today. It's been our pleasure to answer your questions. Our chair, John Badhams, will now close.
Thank you to CEO Natalie Privatera, Chief Member Officer Ben Facer, and Chief Investment Officer Ben Squires. And thank you all for attending today's meeting. I hope you found the information insightful and informative, and that the question and answer session shed additional light on our operations. The annual member meeting is an opportunity for our leadership team to share updates, reflect on the year that has been, and look ahead to the exciting changes to come. Most importantly, this meeting is about you, our members. We value your views and ongoing thoughts about your fund. You can continue to connect with us via the details on the screen. Thanks very much.